Gentlemen, good day and welcome to Ipca Laboratories Q2FY24 earnings conference call hosted by DAM Capital Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nitin Agarwal from DAM Capital Advisors. Thank you and over to you, sir.
Thank you. Good afternoon, everyone, and a very warm welcome to Ipca Labs Q2FY24 post-results earnings call hosted by DAM Capital Advisors. On the call today, representing Ipca management, Mr. A.K. Jain, Joint Managing Director, and Mr. Harish Kamath, Company Secretary. I'll hand over the call to the management team to make the opening comments and then we'll open the floor for questions. Please go ahead, sir.
Thanks, Nitin and DAM Capital Advisors for organizing this call. Good afternoon and happy Dhanteras to all participants, and thanks for taking out time and joining us for Q2 FY24 earning call. Today's calls and discussions and answer given may include some forward-looking statement based on our current business expectations that must be viewed in conjunction with risk the pharmaceutical business face. Our actual future financial performance may differ from what is being projected or perceived. You may take your own judgment on information given during the call. Our domestic formulation business for the quarter has delivered a business growth of around 10% with a 2-rank jump over corresponding period, and Ipca is 13th in acute segment. On chronic market also we had 1-rank jump, and Ipca is now ranked as the 16th in the segment. Ipca has outplaced the industry in both acute and chronic segment. Our market share has improved to around 1.92% from 1.89% on MAT basis. It's MAT September 2023 as per IQVIA. For Q2 FY24, our branded promotional business has delivered a growth of around 15% from 127 crore to almost around 146 crore. Our export generic business has delivered around 32% growth from 200 crore to almost around 264 crore. It's mainly the business growth has come from UK and European markets. Institutional tender anti-malarial business has declined by almost around 21% to around 77 from 77 crore to around to 61 crore. And overall export formulation business in Q2 is at around 470 crore as against 404 crore in Q2 FY23 with overall growth of almost around 16%. API business in Q2 FY24 delivered a growth of around 6% from 307 crore to around 335 crore. We continue to face the price decline and volume decline on certain API as well as on anti-malarial API business. With both formulations plant and Ratlam API plant now in VAI category, for Pithampur plant, for Piparia plant as well as Ratlam plant, the import alerts are already lifted, and we are awaiting that import alert will be shortly lifted for the Pithampur plant also. We are initiating now the process of augmenting the supply chain and revalidations of all the formulations and updating them. The whole process may take around 4 to 5 months, and thereafter the shipments to US may begin in Q1 FY25. Overall, we had given earlier the business guidance for domestic business of almost around 12 to 14%. We maintain our guidelines. In spite the Q2 business growth was around 10%. Overall in H1 the business growth in domestic formulation is almost around 12%. Our international branded business has delivered in first half a growth of almost around 18%. We have projected a lower growth of around 12% for this business, is mainly because of depreciations in Russian ruble and certain contingent challenges that are being faced in West Africa. On export generic business, at the beginning of the year, our projection for growth was around 7 to 8% for the year. As against that, in H1 FY24, we have delivered a business growth of almost around 21%. And our revised guidelines for this business for the year, the growth is expected to be around 20%. The overall lower business guidelines which was given earlier in the year was mainly because we have lost certain tenders in South Africa, and we were expecting a loss of business of almost around 60 crore. But the business there has been good in private market and other businesses, and therefore overall that decline may not be there. On institutional anti-malarial business, the business is likely to decline by almost around 25%. The lower is mainly because of lower demand as well as lower business of anti-malarial injectables is largely because of the plant upgradations which are currently happening. The API business, we have earlier given a guidelines of decline of around 10 to 12%. As against this, the decline may remain at around 7 to 8%. Having given the broad numbers, I would now request the participants to ask questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah. Thank you for this opportunity, sir. I'm audible?
Yeah, you're audible. Yeah.
Okay. Sir, this quarter it seems that you have integrated the Unichem, and that is why to some extent the impact on the core margins and earnings that we have seen. So is it possible to share what is the Unichem number that you would have added in the revenues, EBITDA and PAT?
Overall, I think around 2 months from 1st of August, we have consolidated Unichem in the overall numbers. And overall, I think top line which is consolidated is almost around 285 crore. And I think on bottom line side, there is a loss of almost around 16 crore. Yeah.
Okay. And at the EBITDA level, sir?
EBITDA is positive, around 5%. Yeah.
Okay. So after having, sir, it is whether it is a full-fledged kind of integration from the 1st August or it is after 21st September?
Line by line. It's a line-by-line integration from 1st of August. Yeah.
Okay.
Consolidation.
Okay.
Yeah.
Okay. My second question is about the way forward that we would have decided or thought about after the integration, sir. See, like what cost synergy, what revenue synergy that we are witnessing or anticipating for the integrated operation. So if you can give some sense about it, that will be helpful.
Overall, we have worked out, say, short-term goals and medium-term goals. That's what we need to do because the industry is highly regulated and a lot of approvals are needed before any kind of changes are implemented. On short-term side, let's say there are certain changes on the more particularly in API processes that can be done with minor annual notifications. So that process is already initiated on various raw materials, which can give almost on RMC reduction on those products by almost around 15 to 40%. So that's the one area which is initiated. Second area which we have initiated is we have also started looking into the API processes where the improvements are required in the processes where almost around 30 to 40% API cost reductions can be targeted. And also the Unichem's overall API business is very low. So where with these kind of reductions, the business volumes on API can certainly go up. So that journey we have started looking into. Third process we have initiated is also we are looking into their entire utility cost and all, and we expect that almost around 12 to 14 crore kind of utility cost can be reduced in the current financial year itself. So that process has already initiated. Another process what we initiated is we have mapped into all your material rates they are buying and what kind of material rates what we are getting, and we find that the API the procurement volumes are is very large, and therefore our rates are also are lower compared to what they are projecting. So they are purchasing. So which is maybe the solvent and acids and alkali and intermediates and all that. So that's the process we have initiated now to align the entire process of procurement, even on the services and things, because we worked on annual contracts with suppliers for all the plants, and therefore those kind of costs are also on engineering items and also lower. So that process we have initiated, and that will also start giving results in time to come. Another issue which we have short-term wise which we have looked into is their logistic costs are very high. By and large, they are because of two reasons. One is their air shipments are very high, which is almost around maybe over 50% is air shipment. So we are looking into the various issues whereby the productions can be increased and thereby the reduction can happen in the air shipment. And secondly, mostly their shipments they are not loading the containers at plant. Most of the container loadings are happening at the port side, and therefore their cost on logistics are also higher. And that process of integrations and reduction of the cost is already started. So that may start giving results from the maybe a quarter later. So that process is which we are initiating. So these are the kind of short-term things which we are looking into. Another issue which we are looking into is the market extension of products. Let's say that there are US approvals are there, like say market like Chile, except the US ANDAs and all that. So that filing process we are initiating so that we can open the Chile as a market, and without doing any work on the backward side, because it doesn't require, because entire dossiers are accepted as it is. So with those kind of approvals, the market extension can happen to Chile. We are also looking into reduction of losses which are currently happening in the I think Ireland and UK markets, and we expect much better prospects also coming from their range, and probably there may not be any kind of losses in the current year. It may result into profitability in the current year. So these are the short-term things which we are looking into. As far as medium terms are concerned, we have identified, mapped their entire API processes. All the products may be around 50-55 APIs which they have. So entire process is identified. We have appointed the team leader for every API. We have mapped in that from where the current RMC and where the RMC could go and what kind of changes are required, and entire calendarization is already done. So a lot of work is happening now at the lab level and thereafter the piloting and all. And once those kind of reductions happens, all the regulatory filing and then thereafter the approval from the regulator. So that process is long, but we see a significant reductions in their API costing in time to come. Then another issue what we are looking for is market extension of products. Like say, we identified that out of your overall Unichem's ANDA, there are certain ANDAs, almost around 17 products we identified where on 5 products, there could be a bio-waiver, and those dossiers can be directly filed in, let's say, Europe, Australia, New Zealand, South Africa, where the B may not be required. So that their Bs are not required. So their 5 product market extension can happen quickly. There are another 12 products where the only bio study need to be repeated. All parameters of other markets are meeting internally. So those extension could also happen very quickly. Another 24 ANDAs, the products which are developed that with minor tweaking in the dossiers in a period of almost around 18 months from now. Those products also, the market extension can be given. As Ipca, we do a lot of businesses in Europe, Canada, South Africa, Russia, various ROW markets and developed markets. So these products of Unichem can also be extended to these markets. And let's say all these work can happen in the period of around 18 months, and there may be some time may be required thereafter for regulatory approvals and all. But those integration process and market extension, that process has already initiated. And now that another the aspect we have also looked into is, let's say, what kind of, because the Ratlam plant is now clear and there are certain common API which they are using, where our cost of productions are lower, and those kind of advantage can come to Unichem in their procurement pricing. So those API also maybe around 10 to 12 APIs are there, which can definitely be integrated into the Unichem's basket. But of course, those integrations will take time. There are regulatory approvals and all those processes are there. So it's a goal of around 12 to 15 months time. So a lot of those issues are looked into, and in fact, almost the 55 APIs out of 15 API out of their 55 is basically gives 77% of their business, and the balance 14 APIs are if taken up, then it is almost around 93% of their business or formulation get covered. So all those APIs we are looking into. Then on ROW market also, both the teams are their team and our team are integrating and looking into how can we increase the ROW market business and all. We are also looked into a lot of their NDA which are there under approvals and all, which the approvals are expected and all. From that aspect, I think almost around 11 new products can be launched in the year 23-24. Then 9 NDAs, by and large from April 24 to March 25, that can be launched. And there are 7 NDAs which also include the 3 para 4 also included in that, can be launched in 24-25. So a lot of those work is currently going on. Of course, that will take time. But from looking at all these data, we are very confident that what we had talked initially when we have announced the deal, that we will be able to achieve almost around 300 crore kind of EBITDA margins on EBITDA on the Unichem side. That is very much possible looking into all these details what we have done. And once the market extension happens and we start marketing those products in various markets, definitely we can make Unichem as a beautiful company.
Sure, sir. So this 300 crore EBITDA for FY25 you mentioned, sir?
It's 2 years it will take, because a lot of work and regulatory approvals are required.
Yeah, sure.
Nothing happens in this business without, because you need to take product, you need to validate them, then develop the dossier changes and file with regulators and take their approvals. There are only smaller things like, say, where no solvent is changing, no process is changing, no equipment is changing. But in spite of that also, with minor tweaking in the process, you can reduce the cost of productions and time cycle reduction can happen. So those are the things which are initially targeted. But that may not give us significant kind of savings. Some savings will start coming from that. But the significant savings will happen with those kind of changes what we have planned and already worked out each API by. All details and team leaders are appointed responsibilities are given to the people and the teams are working. And by and large, their focus in next 2 years is likely to be the low-hanging fruits. All these are low-hanging fruits, that process changing and all. The product development will be on a slower pace in these 2 years. The team will work on market extension. There's the API team will work largely on cost reduction. Let's say 80% of the time will be utilized on those kind of processes by the team, so that the results can be obtained faster. So that's the process, so that we can turn this company into profitability.
So thank you so much, sir, for a detailed explanation. Now, having some development on the US business front from our facilities, so could you give some sense, sir, about activating our DMFs and potential filing of dossiers or reactivating the dossiers what we would have filed long back, or what is the thought process here for Ipca's own US business?
Let's say there are certain products where there are no updates in the files, let's say, which are required. So those are around 10 products can start quickly after the supply chain, after the validation, again the process, because we were not there in the market for almost around 9 years. So we will have to do the revalidation of the processes and all, the entire product. So that process can start. On other dossiers and other approvals, let's say API processes has changed, where we have a cheaper processes. That processes need to integrate into our dossiers, because those work are not done. So that the work is required to be done. So that process also we are initiating at our end. So that will take some time. But let's say that earliest we can be there in the market is only in the first quarter of next financial year.
Sure, sir. So thank you, sir. Thanks a lot. Just one bookkeeping number update. See here, the tax number with the integration, what is the ETR that we are anticipating for, let's say, current year and next year after the integration, sir?
You want to know about the tax?
Correct, tax rate, integrated tax rate after Unichem.
Let's say, I would say that as far as Unichem is concerned, there are no disallowances are there, because they are not there in domestic market, and so their tax rate will remain around 25% or so. There will be not much of a change. As far as we are concerned, it's mainly largely the tax rate is going up because of disallowances. Like say CSR costs get disallowed, any donation given that get disallowed, and marketing costs, large part of marketing costs also get disallowed. So that figures the overall. Because of that, I feel that we have made a provision for tax at almost around, which include deferred tax at around 34%, as against normal tax rate of around 25% plus some deferred tax of 1-2%. So as against that, so tax may be on higher side because of disallowances by almost around 6 to 7%. Yeah.
Okay. Sure, sir. Yeah. Thank you.
Thank you. Ladies and gentlemen, before we move to the next question, a reminder to the participant: anyone who wishes to ask a question may press star and 1. Next question is from the line of Chirag Dagli from DSP BlackRock. Please go ahead.
Yeah, sir. Thank you for the opportunity. Sir, of the products, of the 8 to 10 products that you talked about for the US market that can immediately come in the market, what is the market opportunity of these approved products here? Because the last time we were in the market, we were doing about $35-40 million, but since then there could have been price actions, and plus this time around we have our own front end as well, and not necessarily supplying to a partner. So if you can just give us a sense of what is the market opportunity and what should we expect in the first 12 months, in terms of revenue from the US post us coming into the market.
Yeah, Chirag, the initial products will be same product in which we were there earlier in the US market. And as far as the pricing is concerned, in our product range, there is hardly any reduction in the prices in that market. So when we were there, we were sharing almost 40 to 50% profit with the marketing partner. Now that issue is not there. All our products henceforth will be distributed through Unichem franchise.
And Bayshore as well, right?
Bayshore also operations we are integrating along with the Unichem now.
Okay.
Label will remain, but operations will be handled by Unichem.
Understood. So, but the way to think about this is that 100% of the economic interest will be with Ipca, or how will you share with?
No. Economic interest is always with Ipca because we are holding all ANDAs.
Correct.
See, it is like earlier we were doing business through marketing partner, right? There was Sun Pharma. Initially, it was Ranbaxy. At that time, there was a formula, transfer price, in which we have certain margin. Then sales in the US minus our transfer price, minus certain percentage of sales as selling and distribution cost, which we will also give to Unichem because it is a fair percentage. And remaining profit we used to share in the ratio of 40-60 or in some product 50-50. So only that profit sharing ratio may change. Otherwise, economics will not change.
Understood, sir. And would you say that pricing action has gone up or has gone down over the last decade?
More or less, we are confident whatever margin we were doing that time. So that will improve because there won't be profit sharing.
Mm-hmm. Understood. And like you said, 50% you are sharing with your partners. Or...
That is right, yes.
Correct. And sir, can you indicate the number of pending ANDAs we have?
There is no change in that scenario. Na? We have not filed any new ANDAs. Incidentally, recently we got approval for one more ANDA, ondansetron. Post all this VAI for all the facilities and all, one ANDA approval also we got.
We expect a good number of approvals immediately after the Pithampur import alerts are lifted. Because Pithampur is already VAI, so import alert lifting may take few
days, few
weeks maybe. Thereafter, good number of ANDA approvals will come
because all later part ANDA filings were from Pithampur.
And I think we have almost around 18 approvals and around 26 which are
filed and pending approval.
Yeah.
And of these, the ones that you are expecting approval of Pithampur, how many will those be?
Most of them are from Pithampur only.
See, initial all filings were from Piparia. Most of them are already approved. Most of the subsequent filings which are now pending approval, they are all filed from Pithampur.
Understood. So, sir, if I were to take a slightly longer term view, and I understand you will take time, FY25 will likely spend, scaling up our existing products. But if I were to take a, slightly longer term view, do you think, this can be a $100 million business, maybe $200 million business with the existing products?
It is very difficult to comment on the numbers now, but actually when we were there in the US market, our API plus formulation business put together, including indirect API sales, people are buying in India, but end formulation was going to US. All that put together was about 500 crores. 450 to 500 crores.
Understood. And just a last question.
That was with the limited number of products. That time you were marketing about 9 to 10 formulations.
Understood, sir. Understood. And now with Ratlam getting open for the US market, are there any products where your realizations are substantially better in the US market, and hence you can immediately move?
We were not there for 10 years. Now we have to now start seeding business. It will take a little bit time, because all my customers are already currently with some other supplier. But we will start that process also.
Understood. Okay, sir. Thank you so much.
Whereas our efficiency, our cost efficiency and all, it is intact. Leadership position, there is no change in that.
Understood. Thank you.
We are confident we will regain all those lost business in due course of time.
Nobody is waiting for us, so we will have to create the market. So it will take time. So right now we are not in a position to give the numbers here.
Okay.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. Anyone who wishes to ask a question may press star and one on their touchtone telephone. Next question is from the line of Syan Mukherjee from Nomura. Please go ahead.
Yes, sir. Thanks for taking my question. Sir, how are we thinking about the US business in terms of, filing? We have not been filing, and what implications on R&D platform or R&D expenses that you see should happen over the next 2-3 years?
Sure. In the meantime, we have also developed several formulations. We did not do any filing because it was entailing filing cost and all. So now we will increase our filing pace also. So as a group, we will have a lot of ANDAs now in the US. Unichem itself is having 60-70 filings. Plus we have our filings, and we will increase the filing speed going forward.
And so that will have any meaningful implication on R&D expense?
No, definitely. No. So when we were there in the US, we were developing products, filing products. Our R&D cost is around 5 to 6%. Maybe slowly we are now currently around 2.5. Little bit increase will happen.
Okay.
Maybe up to 4% or so.
Okay. And so how many ANDAs have you already decided, like how many ANDAs you would be filing going forward?
Basically, our filings are going to be based on our own APIs. So we are currently producing around 75 APIs, out of which around 46 are filed. So it's going to be the balance APIs. We will look into the filing, and as more APIs are commercialized, more filing will happen. So we are not filing the more number of products based on somebody else's API. By and large, it's a US market is going to be more integrated kind of business for us. So it's not that we have to file significant number of the formulation. That's the practice which is the Unichem also have. They are also integrated operations, and Ipca is also integrated operations. So by and large, wherever we have API, good API processes, that will only be taken up for filing.
Okay.
So R&D cost is not going to have a significant impact. It did not go from 2.5% to 6%. It's going to remain around 4%.
Okay. And sir, I also see that you are making some efforts on the biosimilar front. Anything that you would like to share? How are you planning? What are the products? How are the spends? Are they already sort of coming in, or we will see some increase because of clinical trials, etc.?
Currently, I think the plant is under construction. It may take, I think, by let's say the end of the first quarter next year for plant to complete, and thereafter the validations and all. We are currently working on almost around 5 products, and for 2 we have already taken the EMA, US FDA, and European authorities guidelines, and clinical strategies on that has been finalized. Third is in pipeline. So the 3 products are already at those kind of stage. But the commercialization of that will happen from the plant. So any commercialization efforts will only start after the plant is ready, and then so it's still a far away. But the current R&D cost also includes the biosimilar kind of cost here. And on all products, the development of clone is in-house. We are not taking clone from anywhere from outside.
Right. And sir, this pipeline that you selected, so when you enter the market, so you would target Europe and US at some point, right?
Yeah. It's product, yeah.
So these products, so we are looking at what, 27, 28 kind of time frame, and are these products which are... Yes, right.
After the plant is ready, it may take around 2.5 years to, that's the kind of period for the initial batches, and thereafter all these establishment batches, and then bio batch development, taking the batches and clinical studies and all that. So that's the kind of time after the plant is ready and everything is done, around 2.5 years. So it's a long journey.
Okay. And so the pipeline that you have selected, is it you are targeting the first wave launch, or those are the ones where you see you have a cost advantage and you're going for it despite some of them may have already gone generic some time back?
Looking at our R&D presentations and all, we are getting the Tata values are much higher than currently what market is getting. That's what I can say, but I cannot give the name of the products and right now.
Okay. Thank you.
Thank you. Next question is from the line of Abdul Puranwala from ICICI Securities. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. Sir, can you provide a rough split of the India business between the various therapies and how that has grown this quarter?
The pain segment has grown by almost around 12%. Other therapies like say your cardiac has grown by 13%, CNS 22%, derma 17%, urology 23%, ophthalmology 38%. Other products by around 10%. The product which has declined in the quarter is anti-malarials has declined by 4%, antibacterials has declined by 2%, and cough and cold has declined by 5%. So that's the overall number. So the second quarter was the toughest quarter. I think overall market growth was also around 7% or so. We have grown by around 10%. First quarter our growth was 14%, much higher compared to market. But we are seeing now domestic market reviving. Overall, October was good and November is also appearing to be good. So overall, therefore, we are not changing the overall guidelines for the year. We will continue to have around 12 to 14% kind of growth on domestic market. First half we are at 12% overall domestic growth.
Sure. And so, a couple of quarters back we had added some MRs. So, in terms of the MR break even or the productivity for those, considering that the market has slowed down a bit. So where are we? Are we still on track of breaking even in 2 years, or given the current market circumstances, do you think that will take some time?
I think if you look at last year, my overall MR productivity was 4,18,000 per month. And after addition of people also, I am currently at around 4,53,000 kind of productivity in the first half of the year. That's the overall productivity. So productivity has definitely improved, and this is overall. This includes the newer products. But let's say the people which we have added in kind of the cardiac businesses and all, that take a longer time compared to the other businesses. Like say we have started the one cardiology division which we may be at currently around after 1 year we are at around 1 lakh productivity. But the growth is better. The other division we have around, because there in that division certain products was transferred and also that's around 2.5 lakh productivity. People we have added in here rheumatoid arthritis segment that has given very good productivity and almost that they are around 4 lakh kind of productivity now. Certain products were transferred and certain products were added in that market. But that has not reduced the productivity of the Activa division, which was earlier marketing, and that is also going up. The productivity level is almost around 9,30,000. So that's a good productivity.
Understood.
Overall, urology has also done well, so productivities are good there.
Sure, understood. And sir, a final one, if I may. So, with the US plans getting cleared, sir, is there any plan ahead of sourcing some CDMO molecules from the subsidiary which can be scaled up to this plant and cater to the US market?
No, now presently those things are not considered. So initial our work is to launch the products which were already there in the market when we went out. So gradually we will look everything.
All right, sir. Thank you and wish you all the best.
Yeah, thank you.
Thank you. Next question is from the line of Rushar Manudane from Motilal Oswal. Please go ahead.
Yeah, thanks for the opportunity. So just on the US piece again, so what would be the current capacity utilization for Ratlam plant, Piparia and Pithampur?
Ipca, it will be around 15% to 20%. Pithampur may be around 30%. Ratlam, we are having certain specific plan for specific products where there is a capacity available. In any case, now we are gradually scaling up production at Devas also. That plant also ultimately will be offered to all regulatory agencies inspection. So availability and manufacturing of API should not be any issue.
Understood. But at the same time, even from our external API sales perspective, where there is volume decline for sartans, so how are we looking at?
There is not so much decline in volume, but price decline is very severe, from $100 to about $50.
Okay.
In case of losartan.
But in fact, that is where the other part of the question is that what new API molecules are we looking for growth in API business?
Across all our products, we are seeding across the globe. So we have seen good business progress. Many projects are now getting commercialized. So there is no issue in growing the API business. Only issue is about pricing. Other than that, there are no concerns.
And just lastly, we had this metoprolol filing as well for the US market.
It is filed, but it is pending approval. There is no change in that status.
Okay. All right. Thank you.
Yeah, thank you.
Thank you. Next question is from the line of Damayanti Keria from HSBC. Please proceed.
Hi, thank you for the opportunity. So my question is on your margin trajectory. So a lot of cost initiative happening at Unichem portfolio as well as your own. So like second quarter number includes 2 months of Unichem business. Ahead,
right.
How do you see cost like dynamics changing, and how do you see margins say in near term and then in slightly longer term in terms of like trajectory movement?
Damayanti, Mr. Jain has already explained what initiative we will be taking as far as Unichem is concerned. As far as Ipca is concerned, more or less in the second quarter, if you see our financials, whatever guidance we have given, actually we have done better than that. So there is an improvement in the standalone EBITDA margin from 18.85% to 20.86%. It is nearly 2% in Q2. Similarly, in consolidation, there is 2 month Unichem sales that have come in. In spite of that, there is an improvement in the EBITDA margin from 17% to 17.64%.
Okay, so
and we are confident of assuring the investors that our EBITDA margin going forward should improve at least by 100 basis points year after year.
Okay, so at least 100 basis point improvement per year. That's good to hear, sir. And then I wanted to check update on the Devas plant. You said it is yet to be offered to agency. So what is the timeline? Like when you are planning to invite some major regulators and then?
Initially, we have started developing API. Some products are already developed. Then there is a process, stability and all. So it will take time.
Okay, not in this fiscal for sure, right? Maybe
not the near future. It will take time.
So we have filed the products to various regulatory authorities, and dossiers are filed. So
but when they come for inspection, so again, all that involves some time.
Yeah. So filing has already started from there. At least we have almost around 6-7 APIs which are scaled up there, and filings are in process now. Few filings are already done. Europe doesn't take very long time to come for inspection. Maybe it's a time lag of almost around 5 months. 5 to 6 months they come. So hopefully by this year end or early part of next year, the inspection should happen from Europe. US we have yet to file. So once Europe, I think 5, 6, all these happen, then we will trigger based on our own processes itself the the inspection of from US also. So because we will utilize the Devas APIs also for our formulations in your API. So we will trigger that kind of inspection from there. But when inspection will happen, that's not in our hands. Yeah.
Okay. And so my last question is
inspections and other inspections can start early. Sir.
Okay, got it. So my last question is, like you were working on this continuous process plant for some specific KSM, etc. So any update there, like how that has moved and what kind of margin accretion you are seeing or foreseeing for such continuous process-based products?
We have installed one plant in last few months at Aurangabad. Earlier we have put up a pilot plant and now we have set up a proper plant for one intermediate. So that I think might start commercial production somewhere in end December or so. So from next quarter onwards, then after we get all the results of that, we will talk to you that what kind of reductions are coming. So and other products, by and large, thereafter will taken up at Nagpur. So we are still awaiting some kind of. We have got the environmental clearance, but the consent to start is still pending from the
State Pollution Control Board.
So we are in following with that, and thereafter all the continuous process plant of that type will be set up at Nagpur. So that's the kind of journey. And this plant doesn't have very high investment. With a continuous process plant, every plant may be set up maybe around 20-25 crores. It doesn't take very long, very big investment. So that's going to be an advantage in that your overall capital cost will come down.
Got it, sir. Thank you very much, and wish you a very happy festive season.
Thank you, madam.
Thank you. Next question is from the line of Pulkit Singhal from Dalmus Capital. Please go ahead.
Thank you for the opportunity. This question on Unichem, I mean, broadly, when you look at the US opportunity from 3 to 5 years out, you obviously alluded to, the cost synergies and the market extensions. But when you think about addressing that opportunity, are you looking to invest in the Unichem business to do more new product developments? How do you decide what will be done here versus Ipca? Or will these two be very independent growth engines? Just a broad thought process 5 years out.
Both are the separate growth engine, but marketing will happen through in the US through your
Unichem,
because that's a much better established your business. The Bayshore was small outfit, and therefore we will be let's say both business we will be combining there, and we will keep only one marketing outfit instead of two marketing outfit to reduce all the operating costs of that level. So. But otherwise, both will be separate engines. The Unichem's R&D team will separately. They will report to their managing director, but overall, the selection of products and all, we will guide them in terms of that which our products. Unichem team is taking up which products will. They already have their pipeline and all, so they will continue to work. But first focus will be given on the low-hanging fruits, like say. Process corrections, which Mr. Pavitra Bhattacharya he's the managing director and he's a technocrat, and he's guiding the team in terms of and their R&D is now getting dedicated to correct those kind of processes and all that. So which all action plans has been right, and then market extension, which can give the faster generation of revenue and also profitability. So those kind of things are planned so that we turn Unichem into profitability. That's the first goal. So I said that next 2 years, almost around 80% of time R&D will devote only on the improvements, and 20% on the new developments. Once these major API, these corrections are happen, then only the new developments will be focused. So their R&D cost will not be that high because of course bio cost will be there, but other material costs and other things will be on lower side. But thereafter, again they will take up the development of products. Yes.
Understood. Thank you. Second question is broadly, you had given a guidance of 1,800 crores of revenues and 300 crores of EBITDA. Obviously, you have a much better understanding now, having probably evaluated further.
Yes.
I mean, the company is already doing almost 1,700 crores of revenue. I mean, even now, if you just analyze the first half.
Yeah.
So, how do you see that trajectory changing over the next 3 years? What is the peak potential in terms of revenue growth itself?
No, actually, when we gave this projection, their annual turnover was around 1,300 crores. Suddenly this year and the last 2 quarters, they have seen a lot of opportunity in the US because of shortages and all. So that is why there is a sudden jump in their US generic business. Having said this, they also have a product pipeline. They will be commercializing few ANDAs which are already approved in this financial year as well as the next financial year.
And their Brazil business has started doing, which was earlier cash burning business. They have started doing well. I think this year in first half they have already grown by almost around 65%. And they have good pipeline of products where some of the certain journey we will integrate with their approvals and all. So we see a good future even from Brazil in that market. We see good revenue generations and all even from their European business point of view. So
understood. Just very lastly, what do you think is the peak revenue potential for this entity, and how many years can it take for you to reach there?
Let's say their Ghaziabad plant. I think their production capacity is almost around 200 million tablets. That plant, we have some kind of working is done in it. That production capacity by certain changes in it can go up to 270 million kind of tablets. As far as Goa plant is concerned, the first plant capacity is around 500 million tablets. That can go up to 625. Doesn't need any kind of investment. It's only the internal some changes are there. As far as their third plant is there, Goa 2, which is beautiful plant and it's for the scale up. So we are planning a lot of much bigger size batches there and all that. But that will all go through the whole regulatory process of approvals and all. A lot of things may not happen through CB30 process. It's a post-approval process. So right now focus is to say bigger volume products to be shifted to Goa 2. Goa 2 also has almost around 500 million tablet capacity. So capacity-wise, there are no constraints as far as Unichems are concerned because Goa 2 capacity is practically utilized very, very small. Today production volume may be around 50 million tablets and all. So it's a more scale-up batches to be taken, products with larger products to be shifted to that and after regulatory approval. So it may take around 1 year time to do that journey and that will also result in a lot of cost saving. And also free up a lot of capacity there. And therefore we have talked that next 3 years, what kind of the new products they can launch and all that. And on those products also on API side, we are looking for cost reduction. So their ANDA will have to be upgraded again once the API has to be qualified in those ANDA. So that process is all mapped and workings are going on, but it takes time. That's the only thing that in pharma business, everything has to go through the whole process and thereafter approvals and also. So that's why we have divided the things in 2 parts. One is low hanging and can that be done immediately, and one maybe 12 to 18 months and thereafter the results start coming in. So that's the journey.
That's great. Thank you so much for the detailed explanation.
Thank you. Next question is from the line of Rashmi Shetty from Dolat Capital. Please go ahead.
Yeah, thanks for the opportunity. Just one clarification, whatever guidance you have given for the branded business and your generic business, that includes the Unichem integration sales also?
Unichem doesn't have any branded business, no?
And about the
Even for Ipca, it is standalone Ipca. We have not considered anything of Unichem in that.
Okay, not even in your generic portfolio, where you have upgraded it by 20%.
The guidance given was for current financial year. Next 6 months, we can't do anything much as far as Unichem portfolio is concerned. This guidance, what we have given is our own portfolio, our own business.
Understood. Okay. And, what is the status on borrowing for this acquisition and what is the cost of debt?
Our current net borrowing is around 800 crore. Cost may be around 7%. There is also increase in the borrowing cost. Earlier, most of our borrowings were in foreign currency. We were paying about 1.5%, which has now increased to about 7%.
Overall gross borrowing is around 1,600 crore, but we have almost the balance as cash in the balance sheet.
Around 800 crore.
Around 800 crore.
So net borrowing is around 800 crore.
Yeah. Net of cash is 800 crore.
Understood. So just wanted to understand more. So when you said that, currently in your guidance, you have not included Unichem integration. So you're saying that for the integration process will take time and therefore the sales from Unichem will not immediately come in next 6 to 8 months. Am I correct to understand this?
Whatever Unichem is doing business, their businesses have also grown in the current financial year by almost 35%. So this guidance, what Mr. Jain said, is of standalone Ipca business, which was going business. We have not included immediately anything out of Unichem product in our books so far. That will take time.
Okay. All right. Thank you, sir. That's it from my side.
So Unichem per se, their businesses have grown from 1,300 crore last year. They are growing around 35% in the first half of the current financial year.
Okay, sir. Got it.
Thank you. Next question is from the line of Rahul Jewani from IIFL Securities Limited. Please go ahead.
Yeah, thanks for taking my question. So you indicated that you will re-commercialize your US portfolio through Unichem's front end. So when that happens, would you be booking the sales or the sales would be booked at the Unichem level?
Standalone, we will book in our books. It is an export business to me. Similarly, Unichem US will also book. In consolidation, it will get adjusted.
So it will reflect.
Hello?
Hello?
Yes. Your voice is breaking.
Yeah, sir, I'm saying then it will reflect in Ipca's standalone books as well.
Of course, because I am manufacturing and I am selling it to Unichem US, so it will reflect in my books as sales standalone. Whatever Unichem is selling in US, it will reflect in Unichem USA book. But when you do consolidation, it will get adjusted.
Okay, sure, sir. And sir, any plans of merging Unichem into Ipca through a share swap?
No. Currently, nothing on board.
So both the entities...
Unichem, we have to bring their businesses. We are focusing only on Unichem business now. Nothing beyond that.
Okay, so both the entities would continue to remain separately listed.
That is right, yes.
Okay, sir. Thank you. That's it from my side.